That should be good to go. All right. Hope the chat shows signs of life. Literally, first sentence on stream, bad English. You know I'm an imposter when that's the sequence of events. But here we are. Hope to see signs of life from everyone. Thank you for being here on Casual Friday. We've gone weeks without guests, so instead, in classic either 100 or 0 fashion, we've gone from no guests to 2 guests. Hopefully it'll be justified by the next hour or so. But thank you for coming to Casual Friday, and thank you to Bybit for sponsoring Technical Roundup. For those of you who remember, back in the distant past, derivatives trading was still like a thing, right? So if you want to live the relics of history, make sure to click the links in the description, check them out. They help us out with this channel, the newsletter, and all sorts of good stuff. So thank you to them for their help. And also, and with an introduction as well as extending a huge thank you to our guests, we've got LedgerStatus and CryptoMessiah. Hopefully no strangers to all of you, but gents, how are we doing?
Doing great.
I'll let you go first. I love the way you called him LedgerStatus. I feel like that's just yeah. I mean, that's some next level shit right there. I'm just gonna be real.
Yeah, we have to give him some clout. He's a guest. He gets all the respect.
No, I love it.
I'm gonna need you to introduce me on my own podcast. It sounds way better when I say it.
You guys do work on the side? I mean,
it's like $50 on Cameo, to be honest. So times are rough when you haven't been aping on Uniswap. So yeah, it's very available nowadays.
Yeah. So basically, for the low price of $50, I can get Cred and Donald to show my fucking bag.
Do a Loon Dart style video, and we do have Donald here as well. Hi, Duck.
Yeah, impeccable English, not this bullshit the Americans are speaking, right?
Sure,
the Queen's English,
totally different.
Proper English.
Yeah, proper English. There we go.
It's really a scam because people just conflate form and substance. Like the form is really good, so they kind of ignore what you're saying. But if you were to read a transcript of the actual words being said, you're like, this guy is just as dumb, if not worse, than his accented counterparts. But we got to take the little wins where they're presented, which aren't many nowadays.
I'll give them to you. You guys. I feel like, especially Cred is, you're known for your impeccable grammar,
and that's where the list starts and ends, mate. To be honest.
Yeah, that's okay.
2017 washed up crew, you know how it is. Or you don't, because the reason you're here is because we're here to pick your brain or what's left of it after last night. How's it going, man?
Say that again.
I say we're gonna pick what's left of your brain after last night. Do you want to provide some context?
Okay. Yeah. So, just full disclosure for everybody here. I am, I've had a couple of drinks, like yesterday, and I think I'm still feeling them right now. But I came here because I love you. Messi loves you, and you need to know that.
Are you wearing your gorilla outfit is what I want to know.
No, to be honest, that gorilla outfit was so much fun. And just the look on my wife's face was the most priceless thing I've ever seen. That thing is hot as fuck. Imagine the hottest, shit that you put on in your whole closet, when it's freezing ass cold outside. And then times 10. I was sweating my fucking ass off in that gorilla suit, and all I could think about when I had the gorilla suit on, after having it on a minute or two, is I've got to get this fucking suit off. I've got to get it off.
It's really like a worthwhile investment.
It's already a classic, right? So
yeah, the memes all appreciate it.
Yeah, it was. I did it for the meme. Okay, did it for the meme.
You took one for the team on that.
Yeah, took one for the team. Did it for the meme, or whatever you want to say.
Ledger, you mentioned one thing you wanted to talk about was continuation in the majors and mid caps, right? So I think for a lot of people, it'd be reasonable to have the perspective that you're focused on uni, you're focused on other stuff, whereas the big coins have kind of slowed down for a week or so after the top or the recent top. Do you want to give us some context? Where do you think the market's at from a kind of macro-y, big picture point of view, and then we'll get into the nitty gritty with uni and whatever else the chat wants to talk about as well.
Yeah, I mean, unfortunately, the primary, BTC and to a little bit lesser degree, Ethereum, we're tethered a bit to the legacy markets, and the legacy markets, they're trying to figure out whether they're topped out or not. I think that even if they are topped out, though, there's so much there's a lot of speculators. So I don't think like people buying weekly calls are going to do well for themselves, but there's also a ton of institutional money on the sidelines. And I think these dips are going to get bought. And any downside will be like a slow grind from that kind of process playing out, right? And I don't think we're going to have something like we had in February or March where the market just completely dies. So that leaves our majors in an interesting situation too, because we've been so attached to some of that same price action. And you look at you're looking at market opens and what SPY does. So does Bitcoin, and there's good and bad in that. But it makes it to where we're probably going to chop along, in my opinion, with those. But the macro fundamentals are really great. All the stuff that I see is something, Don, you and I have kind of gone back and forth about. Like, you hate the weekly, I think mostly from a candle structure perspective, but I kind of love the weekly from like a level and trend break type of perspective, some long-term moving averages that I pay attention to that, like, it's not to say like long it all right now, 14K tomorrow, but it's like general health of the market. I'm pretty excited. Even if it takes us a while to consolidate. Like, we could spend 30 days or 60 days going sideways, but still overall have a relatively healthy market and be strong in the face of who knows what and legacy as the election comes up and all that kind of crap. So I'm overall, I'm a dip buyer, and then I'm just looking for setups. And that leaves a lot of opportunity as long as the majors don't go to crap. It leaves a lot of opportunity for altcoins to do things, and every now and then an altcoin to really affect the entire market, like we've seen with Muni the past day or so.
So with all the, this live stream tends to be a bit of a weekly bearish candlestick propaganda, certainly after Duck's Wednesday session. And now that there's, you're presenting the counter case, do you mind throwing up like your, like screen sharing your weekly chart or your weekly setup to kind of give an alternative perspective as to why perhaps the weekly isn't as rough as it may seem? And I think Donald, I don't want to put words in his mouth, I'm sure he can clarify as well. There's kind of a candle close that you're waiting for to see if the weekly has any bearish weight to it. Is that right, Duck?
Yeah. I'm waiting to see if we kind of lose 10.6. Like, we're right at 10.8 right now, and if we don't really go below 10.6, it wouldn't be as rough as I thought it would be. Mm-hmm. So yeah, we'll see.
Yeah, my dog made her presence known. That's her thing. So, Don, I'm with you in terms of like, I just draw this on 11.1, and it's like, okay, we used this as support however many days, and now we just tapped it as resistance. My thing, and this is really the 10.2 level, is the one you and I went back and forth on. The way we looked below that so many times and fended it off, it just, to me, it established a consolidation range, a large one, between like 12.5 and 10.2. Ideally, you wouldn't, if you retest those lows, we're going below them at this point. Yeah. But 12.5 to 10.2, that is this range, all of which I consider healthy, even though it'll have knock-on effects on everything else. But there's several things, whether it's a meme diagonal. More importantly to me is some of these weekly close levels. So 11.5, 11.6 back here was our mid 2019 high. February 2020 was the 10.2 one. And then this one's a little quirkier, but the 9.2 breakout, like we consolidated like crazy. I mean, that's a lot of weeks of, choppy mess. When we broke out of that, it established 9.2 for me as an important level. And what I like about that is it's also right where our 200-day moving average is. Mm-hmm. So I feel like if we do have that breakdown, I love the 200-day moving average. It was our bearish retest king, during 2018. Like, we just constantly got demolished by it. In the bull market, it was like as strong as could be. In fact, the EMA was stronger than that, but depending on how far you go back, like the 200-day does really well. And same if I have the BLX on here somewhere, maybe I don't have it right now, but the 200 week was like absolutely unstoppable. And the 20 week was like a great moving average. So I just really like the 20 and the 200 on daily and weekly time frames for momentum shifters. momentum, and, to detect where can a bottom exist. And that was the absolute bottom of the bear market. This is the 200 week here. So between the 200 day, 200 week, these are like just some signs that assist me I love what y'all do, like level to level, look where your daily closes, your weekly closes, find your strength, and then apply some of the long-term trend mechanics on top of that. And I think it's a really nice combination. And that maybe it's my hopium, but that 200 week has given me confidence several times, even back here, like but this was such a cascade of trash that the fact once we recovered it, I was like, okay, I'm just going to act like all that didn't happen because the entire world fell apart.
Sure.
Not to mention like all leverage, like all of it. Sure. One of the craziest days I've ever seen. So that gives me strength, and that you can go back to 2015, something like that. This 200 week has been beastly throughout. So that's my, bottom of the bear market, but that gives you a range, right? I mentioned 9,200 all the way down to like 7K. Okay, well, that's your big air gap for me, right? Mm-hmm. Everything above 9,200, I just want to be a dip buyer, like when it's appropriate, and use it as finding out what I want to be in outside of that, But I'm totally with you. Like, it's not exactly comfortable saying, you know what, I'm going to buy spot at 11.1 but I might stay in spot for other opportunities, because if I'm play momentum on Uniswap trash, then sure, like I'll see if I can double my money while Bitcoin dinks around.
Yeah, I personally don't think it would be like super bearish if we consolidated here. Like, let's say what you said happens, right? And we go like sideways for 30 days. I think that make me more bullish than bearish.
Dude, people would honestly like lose their fucking minds if this just went sideways for 30 more days.
Yeah.
You mean?
But I mean, maybe that's what we need, right?
I mean, 100%. I think.
I think people trying to trade margin or with option premium, like any of those types of plays, they're going to struggle. Like if you're long premium and you happen to go out to the election, like if we just dink around that whole time, like anybody long premium, anybody getting eaten by funding one way or the other, or getting chopped around as it consolidates, like this is painful for a lot of stuff, but it's not necessarily painful if you're playing momentum coins outside of Bitcoin.
Yeah, Messi, I was going to ask you a similar question. When you're aping around on Uniswap, do you keep an eye on Bitcoin? Do you keep an eye on ETH? Does it kind of affect what you do, or is the ecosystem kind of isolated enough for you to just, I guess, focus on Uniswap?
I think you do have to keep Bitcoin and keep like the macro climate in mind. But for me, I try to just like trade the charts that are in front of me and stick to what's in front of me. And I figured that there's so many people that try to overcomplicate this, Bitcoin's going up, so I've got to sell this setup that I have over here. And, because that means that's going to go down and, blah, blah, blah. And that's not always the case. I feel like if, you have an amazing setup on an alt, and it looks strong versus the dollar, and it looks strong versus Bitcoin, and Bitcoin starts going up, it has a potential to rise with Bitcoin. So that's like my main thing here. In terms of, like being bullish or bearish right now, I'm 100% like on board with what Ledger said. I think that you've got like guys like MicroStrategy coming in and buying $100 fucking million worth of Bitcoin. Like, that to even think about that is just insane. And the fact that like they're doing it, they're an early mover. Like there's going to be other people that come in and they're going to execute strategies and they're going to execute strategy. Yeah, they're going to want to have Bitcoin as like a small percentage of their portfolio. And we're talking guys with, billions and billions and billions of dollars of assets under management. And, I forget what it was, but there's some kind of ratio, like for every maybe $1 billion injected into Bitcoin, it will raise the market cap, I think like $20 billion or something like that. And it's very difficult for me to, even with, SPX and, maybe the dollar is getting a little stronger. And even with things like that going on, like Bitcoin wasn't always it didn't always have this really strong correlation with those things.
Those correlations really, they kind of come and go. And I'd love to see us cycle off of a strong correlation. That would be hyper bullish. And I didn't get into the dollar and gold stuff, but we're in this really weird overall non-correlated like what is in gold, like the most non-correlated asset in legacy, and Bitcoin's even more non-correlated on a technical level. But you can't not look at these daily little price action and see the correlation. So you want to get the big price action uncorrelated, even if the little price action is correlated. Does that make any sense?
It does to me.
100%. Yeah. I mean, if there's fucking major blood on legacy one day, like there's probably going to be blood on Bitcoin on the same day. I mean, and that's just like how it's been. I think like for me, I love the sideways theory, not only because the max pain that causes to bulls and bears. I mean, the whole meme has been the Cope meme, right? That this whole time why everybody's like been getting hilariously rich on Uniswap, these Bitcoin maximalists have underperformed these guys by, orders of magnitude. And there's a lot of salt out there. But I think, and one of the biggest signs I'm looking for, like for when is it the move is the question. Do I watch Bitcoin every day right now? Because, does that affect the way I'm trading alts? No, because I don't believe the move is here yet. Everybody thinks that Bitcoin has to go back and retest fucking 7K tomorrow, or is going to go to 18K tomorrow. Like, I don't think that has to happen at all. And I think that the number one thing everybody should be watching is that correlation with Bitcoin and legacy. Like, when Bitcoin starts becoming decorrelated, something's weird. Something's going on. And I think would be a really appropriate time to pay attention and maybe de-risk on the alt side and, take some precautions. Basically, you got to secure the bag.
I mean, listen, you're all just being really smart or trying to be. The real answer is, if this correlation exists, stocks are an all-time high. Why isn't Bitcoin an all-time high? Fucking checkmate. Get off the live stream. I think we're done here.
I think there's something worth talking about in regard to that, because I think if we properly cleared this level, I put my screen up again.
Yeah.
This was all wicks back here. And when we got the weekly close, but it was puny, that kind of freaks me out, because I feel like this market's just not ready for an all-time high. It needs more time, because 2017 was stupid. Like, it went up 17x.
I felt pretty smart. Don't know about you, mate.
In 2017, I felt both very smart and very stupid.
Yeah.
Depending on when you talk to me. But I feel like once we properly get above this, we're going to this. This is the jam, right? Like, everybody and their mother wants this. It looks like two boxes right next to each other, except for the freaking fact that it's a double. Like, there's hundreds of millions of dollars built into that, and then it's just this anticipation of price discovery and yada yada yada. So when we broke down from that, it just told me we need time. Like, we need time to dink about, and dinking about can be painful, like, depending on how you consider pain. But it also opens up the opportunities for a lot of other stuff to do. And I think I'm all for trying to take advantage where there's opportunity.
But does everyone agree to some extent or to a large extent, that high time frame chop in Bitcoin would just be positive for the either Uniswap or altcoin or whatever ecosystem, however defined? Is that kind of the broad consensus view?
In a bull market, which I think we're in, then yes, I think so. If you look at 2018, it wasn't bullish for alts at all, because it was overall money leaving the ecosystem, losing faith, that eventually led to the breakdown from 6,400.
Mm-hmm.
I think this is almost the opposite, where we have slowly money coming back in, anticipating bullishness. But I don't think the macro is quite there for us yet. Like, gold price discovery, dollar, like, eating shit beyond all hopes and dreams that you thought it would. Like, foreign currencies finally starting to catch up, getting the election behind us, and the hope of a new whatever new era, whether it's the same era or someone new, and money comes off the sidelines. Those are the types of things that I think need to happen before Bitcoin can rampage and gold just goes insane, and the money printing catches up, or whatever macro narrative you want. Like, everyone to in macro landscape says that, and I think all of those set up for Bitcoin to eventually be extraordinarily bullish, but not yet.
I think it's a very measured view. Dark, any macro thoughts? Because you've got, I think it'd be nice if you screen share, Don, and give us, your kind of high time frame, not thesis per se, but the kind of large time frame range, which is something Ledger was talking about a fair bit as well. That you have these basically high time frame, big picture levels, and until one of them is broken properly and until we trend through them, it's all just chop. Do you want to kind of provide some context with that?
Yeah, sure.
Because I think it's really applicable to what we're discussing here.
So for me, can you see my screen?
Yeah, clear as day.
For me, this is all like this entire thing, since it's like 20K breakdown, this entire thing is pretty much a range for me, always has been. And this kind of breakdown, or like the last two breakdowns, were kind of a little bit too aggressive. So they traded below. They traded below the range boundaries pretty much. But I'd say like we're pretty much at the range high, like we were at like 11.5, 12K. I got rejected there, so it would make sense to kind of think about like it moving back to the range lows. But I think like there's a clear trend that you can see in this entire thing, in which the lows have been getting higher, obviously. And I mean, so far this is pretty much like a flat top, right? So you might be like, if you're like a pattern, whatever kind of guy, you might be saying, okay, this might just do something like this.
It's the ascending triangle I'm going to give to my great-great-grandson to trade at this rate.
Yeah. I mean, does that have to play out? No, right? I'm just watching it. And I mean, I wouldn't be bearish if we went to like macro bearish if we went to 7.7. I don't think that would be like, would break Bitcoin apart. I don't think so. Like it could easily go there and then go back up, go back down, go back up. Which I think would be really positive. Like the longer this just goes sideways, the bigger the move afterwards can be. So that's kind of my view on the entire like macro picture. Who knows if that's going to play out, right? But that's been my plan. So I've been always kind of looking for buys at 6K, looking for sells like at like 10, 11, 12. Yeah, that's been working well for me. So that's kind of how I'm looking at the market.
How do y'all look at it in terms of, Bitcoin price and market cap relative to all price and market cap? Like, to what degree does Bitcoin's price action just enable or make difficult activity elsewhere?
What exactly do you mean? Do you mean like if Bitcoin goes up, altcoins do what? Or what do you mean?
Yeah, kind of the relationship between Bitcoin and majors, Bitcoin and what it enables from a speculation standpoint on small caps, whatever you're paying attention to, like contraction in the market versus expansion.
So for me, like how I've kind of watched interpreted the market in general is when you get the altcoins move really big, it's when you have a lot of hype in the market, right? And that usually happens at the tail end of a bull market, right? So like the big altcoin moves that I expect at some point to happen, they're going to be happening when Bitcoin is crazy, crazy high. And once that happens, I think that the sentiment is an all-time high, and then you look for your exit. That's what I've done back in 17, 18, where I was kind of using the altcoins to at least try to aim, like time the top. And I think like for now, it's just like altcoins go like sideways, or bleeding down. And then at some point they get oversold and then bounce. But I don't expect like a big altcoin run in general until Bitcoin is really high. So
what do you consider big altcoins? Like, I think we're seeing a huge shift between old coins and new coins, and people in old coins totally missed the boat. Yet we're seeing new large caps appear. Obviously, like Link, Ren, a couple others were really forerunners to that, but it's like it's a changing of the guard in my mind, and more running occurred than a lot of bag holders of old coins might realize.
Yeah, I mean that I totally agree with. Like, if you're stuck in the that's kind of the problem that a lot of people have in the altcoin sphere in general.
Oh,
they buy a coin.
Share for a second. Sorry to interrupt. Just so we can get the bounce. Want to see Ledger's beautiful face when he has a clever retort. Go ahead, mate.
So where was I?
Just got distracted by my beautiful face.
Yeah.
Just talked about Ren, Link, new altcoins.
Oh yeah, the new guard. So you have like these people buy coins a lot of the times, like during like the crazy tops, like in 17, 18, and then they hold on for dear life, right? And they're just hoping that they get back in profit. And that's been coming in.
So these guys that you're describing will never, ever, ever get back in profit.
That's kind of that's the problem, right?
So you don't know me, bro. Okay.
You get these bags. I've got great teams, bro. I've got great teams. I believe in Bitcoin.
Yeah, the problem is
Dev last week, he said we got big things coming.
Dev dead. Just go for the King BTC.
like you have if you think about it, like if you want these older coins to get back to all-time highs, right, you would have to sponsor all of these people out of their position again, right? You would have to buy like the coin, would have to be bought so much that these people that have been holding for ages don't suppress price anymore by selling. Which, I mean, why would you do that if you can just pump a new coin, right?
Look at this. Look at these market caps. This is 2050 market cap. We were just looking at these when we were recording our podcast, and the top 10, if you go by 2050 cap, so it's not current supplies, but like the old stuff's not in there. It's the Filecoin cracked me up, but like Polkadot's release and Cosmos and Uni's a day old and it's number 7. Chainlink and Tezos, and where it's just a matter of time until these others, the stronger the cults were before, the longer they'll take to bleed out. But your XRPs and your Bitcoin Cashes and your Litecoins, and they're just going to go away. This is the transition that's occurred. I mean, Matthew, you've seen a mini market cycle, but we're seeing it again. Like there's a whole new slate that's going to be the top performers, the top trends.
And honestly, I think a fantastic example of that, if you guys have ever heard of Feathercoin,
yes.
Feathercoin was like if Bitcoin was gold and Litecoin was silver back in the day, Feathercoin was copper, right? Like it was even faster than Litecoin. It was super lightweight. It was quick. It was amazing. And there was a lot of like people that really bet big on Feathercoin because they thought that Feathercoin was going to have Lindy like Litecoin. It had been around for a while. It'll just continue to be around for a while. But we're seeing right now when we look at the market caps of some of these projects, there's literally hundreds of Feathercoins out there. People just don't realize it yet. And what I mean by that is like what Don Alt was just saying, I'm a whale, right? And and I'm not saying I am, but anyway, hypothetically, I'm a whale. I want to come into a market and I want to mark something up as much as possible. And I want to provide support and I want to distribute and I want to walk away, right? I mean, that's essentially the goal. I accumulate as the whale, I mark it up, then I have to distribute. Then my job is done. Why would I go to this coin that still has $100 million market cap? Don't fucking even ask me how. Like it's just artificially kind of propped up just because, it's reached such a point of despair that people are like, oh, I won't sell it anymore. Like, I don't know if you guys follow BagsyBot on Twitter, but yeah. I do. And like, a couple of days ago, I saw all sorts of new all-time lows coming in for these dinosaur coins. And I don't think the bottom's in for them. They're going to continue to bleed as more and more people say, fuck that, I've had enough. I'm getting out and I'm going to go chase the new stuff because even as like a community member, you get into these old projects and these old coins and the whole way up, your upside is just automatically limited because everybody there is only thinking if I could just get my money back, if I could just get a 2x on this, I wouldn't be down 90%. I'd be down, whatever. If I could get a 3x on this, I could have enough money to maybe, feel comfortable selling this, to feel comfortable not taking this catastrophic loss. Like, guys, like this, of course, isn't financial advice. Like, but the way that I look at it,
I'm considering financial advice.
It's financial
advice
for
if it goes wrong, right? That's how it works.
Yeah, right. It's financial advice for LedgerStatus, but not for anybody else. Right. It's in my opinion that like if I had money that was tied up in some of these old dinosaur coins, and I was of the mind that if I just get a 2x on this, then bam, like I'll be back in the game. I've been studying, I've been watching all this new stuff. I really want to get involved with it. To be honest, guys, I think I'd take the loss. Sometimes you have no idea how relieving it is because trust me, like I've been around here for a while and I've been wrong a lot. Okay. And I'm totally comfortable with myself and I feel like I can say that and I can be proud of being wrong because the main thing is if you're wrong, you have to know that, holy fuck, I'm wrong, right? The inability to accept the fact that you're wrong leads to more ruin for, I feel like, anybody in this space than any other thing. But yeah, it's okay to be wrong. Cut that baggage. You'll feel so much better. Like I can't imagine carrying baggage around that I had for like 2 years that, like people made large sums of money. Like, oh, fucking, I had $100,000 and 2017, and my Verge is it's worth $5,000 now.
Yeah.
Like that was enough money to pay off my home, but now I've got a $5,000 bag of Verge. Cut that shit, guys. Like, come on, like cut it. Put some bandages on the wounds. Like, take that lesson, and put a fucking Post-it note on your monitor so you never make that mistake again. Don't become a community member. With that being said, I know like the whole community member thing is kind of a meme and it gets a bad rap, but all of my biggest wins have been when I actually do become a community member. But there's a difference in becoming a community member because like
voluntarily and not.
No, yeah, right. Community members, sometimes it's voluntary and sometimes it's not. Like, for example, in 2019, like I saw Ren and RSR, and I was like, these projects from a fundamental perspective are undervalued. And I have a strong belief in that. I'm going to become a community member so I can learn everything that I can about these projects and, reinforce my opinion or, maybe dissuade myself from believing that I am holding something that is severely undervalued. And, people are joking on MTA so fucking hard right now, but I will proudly say I am 100% okay with being an MTA community member because and I've been wrong before, but I feel like there's some value there that is unrealized. And I feel like, if I can just sack up and not be a fucking idiot and, hold my bag, I feel like in the next year, I'm going to make bank on that. People want money tomorrow. They don't, if I told somebody in this chat, maybe somebody that's been losing, somebody that's down on their luck. If I told somebody, if you find a project, a real project, not one of these indie cash grab, pump and dump pop-ups, not the latest fad, but if I found a real project that was new with a community that was, not like riddled with bag holders, full of people with hope. And I committed to being a part of that community. And I told you, all you have to do is hold this shit for 1 year tops. Okay. And you're going to 10x whatever money you put in it with 100% certainty. Most people couldn't do it. And it seems so easy when you say it, but in practice, like sitting on your hands and accepting the state of the market is one of the most difficult challenges I've ever faced, at least.
I couldn't do it. I'm not one of those people. This is one of the big differences between us is you tend to have an investment thesis that you apply and then you can average down your entry or you can play it, with some TA insights, but it's like supportive of a broader theory. I don't want, I've been a bag holder. I don't want to be a bag holder. I want to play setups and I might be in for a pretty short amount of time. And I'm going to use the fundamentals that someone like you is going to help me identify or I figure out on my own something I like, but I'm going to just use that to support my broader or my technical thesis on something. And I'm going to play the setups and there's no technical pattern where it's like, oh yeah, obviously this is a 10x. You break.
No, for sure.
Not until my PDF course comes out next week. Yeah.
Yeah, you break out of this pennant and then it goes 10.
Oh my god.
Thing is, I agree, and also crypto is so momentum heavy in so many instances that even if you weren't one of the early adopters who may have caught a chunk of some of this project from VV lows, you can still make pretty, asymmetric, for lack of a better adjective, returns, even catching on once people like Messi have already been rewarded, So the test pump, if you will, could be someone else's god tier trade, depending on their strategy and stuff. One point I really liked about the mental baggage and just cutting those bags, etc. Some might interpret that as kind of chasing, and I disagree. What I've noticed back when I was a bit more heavy in altcoins, nowadays it's just a complete mess, but back in the day sort of thing, if you have bags and you're not willing to at least reassess, reanalyze, or do whatever, you're just sitting in them, I think that comes with some risk of complacency, whereby you're there's all these new projects going on, all these new setups, but I'm not really going to check anything out because I already have my altcoin allocation. You kind of become closed-minded if you're not there kind of poking, prodding, and expending your mental capital, at least in my experience. Don't know if you gents agree.
And I want to give Messi a shout out here because that's something he's really good at is reassessing that initial analysis and being able to cut it because it no longer meets his criteria fundamentally or technically. And therefore being able to make the change and take a hit. Like taking a hit,
It sucks.
Yeah, it sucks, especially on these altcoins where it might be illiquid or your potential downside you built in was like, if I take a 30-40% cut, that's part of the game. Like, and then you eat it when it's done, and then it might reverse on you and you'd be wrong, but it like no longer meets your criteria. Just like if you're doing a like scalped margin trade where, you know, it's purely technical. Messi's really good at that, and most people aren't. So they're going to stay bag holders. Like Messi's not going to be a bag holder forever, even in a coin that like doesn't do what he expects. You know, like eventually you take the L, you use the capital elsewhere on something you believe in today.
Oh, 100%. And the main thing I want to stress here, you know, that I don't think's been brought up yet is there's no right way to do this, guys. Like there's a million ways to be a participant in these markets. And the main thing that I would encourage everyone here to do is to find out who you are and find out, you know, where you find success, you know, and at least when I started, a lot of guys from my generation, we refer to ourselves as professional bag holders. And I think that's honestly the best way to frame my strategy, because if you think about it, and here's kind of my whole thesis, in a bull market, or for a really, you know, quote, quote, serious project, right? You know, a big deal project, we're talking $100 million cap on the low end. You know, if it gets really, really big, maybe it goes to 250 million, maybe it goes to 500 million. But I try to look for those projects that, you know, I see like hints of greatness in them early on. And, you know, I want to buy in when it's a $10 million valuation or lower. And that, for me at least, gives me a lot of comfort knowing that at $5 or $10 million, and, you know, of course, this can be totally invalidated at times, but you've got to recognize that and you've got to adapt. But at $10 million, $5 million cap, I believe my downside is limited if the fundamentals are strong enough to where, you know, we can continue to at least roll in a few new believers, you know, every day. You know, that's enough to at least limit that downside and limit my risk. But the upside exposure is just crazy. And, you know, here's the biggest thing. Of course, I am going to fucking dump on you. Like, who is not going to dump on you? Like,
Messi, if I had to have a finger for every time Messi dumped on me, I'd be like a freak, you know, I'd have like 7 hands. But Craig, you mentioned this earlier, like, you know, my great trade is you know, like I'm buying where someone else 10x'd, and Messi and I have been in a lot of the same bags, but there's been many where I don't even buy until he's out.
Mm-hmm.
And then you make money too.
Yeah, heck yeah. Like here, I didn't buy Wi-Fi until it was $21,000.
Yeah.
Like what did it start at? Like 4,400 at the lows on Binance. So that was somebody on Binance. It was already probably 10x before that, you know. But here's a few of the trades that I've taken on Wi-Fi, and these are a similar fundamental screen like he just talked about, except for I was taking a trade setup inside of that. And I was looking for what's a possible momentum play inside of that. Or like the market went to crap. So like, okay, I think it's been enough. I'm going to hop in and like catch a little revenge bounce. I'll play these in their own way. I'm using similar screens, but then I'm applying a more technical setup or like a bounce setup or a consolidation that I'm expecting continuation out of, something like that. And I don't care what the freaking cap is relative to, you know, where someone else bought it. Like one of the earliest ones I had on this Uniswap craze, I bought it at 12 cents. It's called Trade. And that was already a 4X from some dumb presale they had. And then I just like went out of town. So otherwise I wouldn't have held this. But I sold it at like 55, 60 cents. And then I traded it several other times trying to catch a new momentum move. And I didn't catch it every time. But will I take this trade right here? Sure. I don't have a problem taking that trade. Mm-hmm. Now I'm going to be more conscious of the fact that like some holder wanting to get out of it, they might choose to do so at a bad time for me when I'm halfway into a trade idea. And these things are so illiquid, like it could hit waterfall. Yeah, I could freaking feel it. Like just look at Cream is a great example. Like Messi was considering his profit taking at the same time that I was making new entries on this. Like I bought it here and then I bought it here. Like Messi was like, hey, I sold this today. I was like, cool. Hey, I bought that today. And I played it up into here because I was getting incredible returns and I was playing the individual trade. Mm-hmm. And then I tried buying it again here, and I averaged it down here. And then I was like, oh God. And then I averaged it down here because I knew Binance was coming. And I was like, I made this tweet. I was like, if Binance doesn't list this week, I'll like eat my shoe or something.
Sure.
Well, Binance came, but my idea was dead. I was just waiting for the Binance thing to come. And then I'm like, all right, bye. So I got out at $105, and I got lucky because I didn't anticipate this, which this chart looks amazing right now. Like another $60 down, like a 70% dump after a 70% dump, because that's what can happen in an altcoin. You got to be careful with this crap.
Yeah, I suppose it works both ways, right? But a reasonable takeaway would be in strongly trending instruments in that context where the market caps aren't what we're used to, not taking an idea on the basis that it's already up whatever X, or already down whatever X, just doesn't tend to be the best logic in the world. I think there's just so many more shorter term drivers and momentum drivers rather than taking some arbitrary up X from Y type of thing. Would you agree with that?
Absolutely. There's momentum, there's news, there's chart patterns.
Listings, apparently. It's been a bit of a binge.
Yeah, there's a ton of stuff that can play into. There's yields. Like something can do something pretty dumb because the yield is really good. There's so many things that can go into it. Does it get riskier and riskier the higher the multiple is? Absolutely, because eventually it gets to the right multiple, and the person like Messi that was in from a fundamental investment thesis, he just 20x'd and he's freaking thrilled. Is he okay with 20% slippage after the thing goes up 60% on its like blow off top? Absolutely. He'll dump all over you on that. And then it can cascade from there. And these things, I was showing you a 4-hour chart, but if you see the daily chart of something like Cream, it's like an Eiffel Tower pattern where it rockets up over the period of a week, and then it goes 100% retrace over the next week. And you don't want to be stuck in that. So you got to be nimble, man. That's why people don't sleep during this type of period, because that stuff is crazy.
Something I wanted to ask, since we've got uncharacteristically proficient altcoin traders with us on Friday, and again, thank you for volunteering your time so kindly. We've discussed this a couple times between ourselves, Donald and I on stream, but the altcoin landscape generally looks obviously quite different from what it was in, say, 2017, 2018. And one of the main drivers of that, I think, is sort of linear futures or USDT or USD type trading on margin with altcoins. Like if you told a lot of people in 2017, 2018 that you could just, in a very liquid, on a nice exchange with all the privileges we have now, short altcoins and get fiat, no one would believe you, right? Whereas now, it's especially with the most recent listing craze and, CFI, if that's a term, exchanges kind of just chasing every new decentralized project that's got a lot of hype, and landscape's quite different. What are your broad views on trading alt BTC pairs and the kind of growth of alt USD pairs? Is it good for altcoins, bad for altcoins? Does it say something about the demand for Bitcoin, given that alt BTC pairs are just kind of like hard to even compare with regard to compared to alt USD volume? Just any kind of general thoughts on that evolution, I suppose.
Man, I've had a total shift on this, because I historically traded BTC pairs because they were dominant for a variety of reasons that you just described. And now I think BTC is probably the third pair I would pay attention to on a typical, especially DeFi token, because most of the pools that I'm trading in are going to be alt ETH or alt, stablecoin. And from a setup perspective, I'm almost entirely taking trades against the dollar. And then sometimes I look at, like, is it outperforming Ethereum itself, especially when Ethereum was trending hard? Like, I can just be in Ethereum with a lot less risk if Ethereum's going to go up 5% a day or something, when it went from 240 to 400. A lot less risk there. But most of the time, especially now that Ethereum and Bitcoin are in these ranging type of modes, I'm just looking at dollar charts, and I'm looking to maximize the dollar, and I want to pay attention broadly. Am I keeping my Bitcoin buying power? But I'm not looking at a Bitcoin chart necessarily for the setup, unless it's a coin that really only has a Bitcoin setup, which right now Nessie, maybe you can correct me, but that's mostly like smaller caps on centralized exchanges, which are not exactly in favor at the moment.
Yeah, I would totally agree with that. And that's like a paradigm shift because, back when I started this, everything was liquid versus Bitcoin, charted versus Bitcoin. There were some savvy guys because sometimes the, USD chart would lead a Bitcoin chart. And that was kind of like some old wisdom is, hey, watch that USD chart just because like the USD chart might break out, even if it doesn't have a USD pairing. And that could be like a precursor to a move on the Bitcoin chart. But really now, like, I don't look at the Bitcoin chart at all because it's irrelevant. Bitcoin was relevant because everything was liquid versus Bitcoin in the past. Now with this Uniswap shit, I look at versus Ethereum and versus US dollar. I think most people are actually looking at it versus US dollar. So I would imagine that's the most important pairing.
What does that mean for alt BTC pairs, in your opinion, just generally? Do you think if Bitcoin moons, if we get that type of reallocation mini cycle where ETH just kind of gets stuck or drags and Bitcoin just goes completely apeshit, do you see that perhaps, at least in the short term, causing a bit of a shift back towards alt Bitcoin pairs and that'll be seen as a means to acquire more Bitcoin? Or is this just kind of what we're dealing with now, where alt BTC, whatever, it's all about the margined futures on these centralized exchanges with USD and altcoin USD pairs?
People will start looking at it, but it'll be like 50% too late. Like they realize they've been getting obliterated relative to Bitcoin, and then they're like, "Oh crap, I need to look
at USD." I wonder when that meme will just kind of lose relevance. One of my favorites.
It won't, man. It'll again. It's got people sleeping. I'm hyper bullish on Bitcoin. My whole point in all of this is to maximize dollars for life. But I still think the best long-term way of doing that is through Bitcoin. So all of this stuff, I want to get as much Bitcoin as I can so that when the Bitcoin Omega pump actually occurs, that I have as much Bitcoin as I can. And when that's done, I'm out.
There you have it.
So you're not like fully, okay, I'm going to hold Bitcoin for like till I'm 50, 60, 70. Yeah.
Maybe a couple.
Enough for the Citadel, right? Is the correct answer.
Yeah, the world has to be pretty bad if all our fiat currencies collapse, doesn't it? And what if fiat currencies don't collapse, then what's the ceiling for Bitcoin? I don't know. Is it 100,000, 200,000? You start hitting these overall market caps competitive with gold and stuff when's that equilibrium from a total value perspective? Maybe like 100, 150. So what's that? Another 10x on Bitcoin or something? I think our mega move could easily be a 3, 4, 5x of Bitcoin from current levels. And I've already capitalized on a lot of my Bitcoin world currency type of vibe. So I don't know what to expect after that. So I'd approach it from a trade perspective, but I don't know. I'm always going to keep an eye on what's my buying power of my whatever I have. And if I can achieve buying power through gold or Bitcoin or stocks or real estate, I'll do it.
Yeah, I'm interested to hear everyone here's perspective on this, but I think that Bitcoin at $100,000 or more is an outrageous number, like absolutely outrageous, like absurd, like in my opinion, will probably never happen. Like
the stock to flow model is going to fail eventually, but right now
I have exposure, so I'm trust me, being wrong would be one of the best things that could ever happen. And I'm very happy to be wrong about this. But the next big bubble, it's coming. It's not a question of if, but when. Was that the top? Maybe. Is next year the top? Maybe. Is 2024 actually the top of the next macro like bull market cycle? We don't fucking know is the important thing here. But what I would speculate is going to happen, and we got a taste of this in 2017, but it didn't stick because all these ICOs were just fucking dog shit startups with a token, attached to them. That was it. That's all they were. The token really had no real utility. They were cash grabs. They were scams. And I think for the first time ever, we have projects that really, stand to be around for a while. Lending and what YFI does, and like all of this stuff is totally new, and it's powerful, and it has staying power because the whole, all of the users, all of the customers for these protocols now, it has this immediate product market fit that I've never seen on on any kind of like crypto product ever. And when I said that's DeFi as a whole. So let's say Bitcoin goes to $50,000. Like, trust me, I'm getting the fuck out then, because, you know, okay, then it goes to $100,000 after that. Ha, you suck, Messiah. You know, you sold your Bitcoin at 50K. I don't give a shit, dude. You got a 2x on top of me. You know, like, I'm not sweating that at all.
You bought like millions of dollars worth of real estate that you'll make passive income on the rest of your life.
I'm not sweating that.
Yield farm some houses, yeah.
Yeah.
What exactly happened last time in 2017? Bitcoin lost a lot of dominance. You know, what I think is going to happen this time, I'm super bullish on Bitcoin. I think Bitcoin's going up. My target is somewhere between $30,000 and $50,000. But what I'm extremely what I have really strong convictions about is that Bitcoin's going to lose a lot of its market share relative to what else is in the market. Because I think for the first time ever, there are other things that all these things can coexist. That's been proven. And these things aren't challengers to Bitcoin, right? But they're things that add value to the ecosystem. Maybe even more value than Bitcoin. I would argue that Ethereum provides a lot more value for users than Bitcoin. Right?
Yeah, I feel like a bunch of games that are really establishing what will be the rails of the financial ecosystem in the future, because it's not hard to imagine like automated contracts for financial stuff, or using a blockchain for trading mechanisms or whatever. They just got to be a lot better. Like, we're playing with like the Apple II or whatever it was, you know, like the real good stuff doesn't exist yet. In terms of Bitcoin, I pulled this chart up purely because I would just want to say, like, the monthly gold chart is giving us a template for what to expect in my mind for Bitcoin all-time highs. And a couple things gold has done is once it broke out of the range, which was like 1350 for me, it pretty quickly jumped up to the consolidation breakdown, which is our equivalent of maybe 14K.
Sure.
And then it just was like, no, screw this, game is on, and made an all-time high. So now we get to see, what does price exploration in gold look like, and what are we going to get out of that? Are we going to get 50%, 100%, 200% in gold? And the higher gold goes on a relative basis, the strength that it shows on its all-time high, I think Bitcoin will blow whatever that is out of the water. And hopefully gold is ahead enough to give us like a nice template to have some idea, or they go side by side. So like we have some confidence in another asset with similar mechanics that we can use as part of the way we account for, when am I going to exit? What am I looking for? What are my targets? What kind of extensions do I want? Price exploration is really hard to like map out, right? Like, Link breaks $1. Okay, well, can it go to 2? Well, it went to freaking 20. You know, how do we map that out? Y'all, Cred and Don, y'all are our level to level pros. How do you map out price exploration?
You handed over to the trend following guys at that point, I think, is what we wrote in the newsletter. And that thing broke out. I was like, well, you know what? Just we'll hand it over to our friends. But when there's no resistance, what are you really going to sell? I think you can extrapolate levels. Like, I don't want to go to fib extensions. I mean, maybe we get into some real voodoo territory. Yeah, like in the dusty 2017 toolbox, you like go up to your great grandfather's attic, dust off some really old looking box, and you find some tutorial on fib extensions. I mean, maybe. And at that point, just like psychological numbers, whatever they mean, either with round price numbers or market cap, etc., etc. But yeah, no, I agree. It's, I think the trend is your friend is one of those things that means very little in most instances until it's very clear. And for me, positive price discovery is really one of those instances where that applies. But one thing I wanted to cover is what is, we talked about invalidation a lot, being able to cut ideas, etc. I made probably the worst timed shitpost. Arguably that applies to all my tweets, but this one was particularly egregious because when DeFi or DeFi, I say DeFi, I'll probably get butchered by half the audience for that.
It's decentralized finance. It's absolutely DeFi.
DeFi. There we go. I think that's...
I think for Cred, it's forever DeFi.
DeFi, yeah. DeFi. Yeah, no. So I basically made a tweet saying, masternodes, like DeFi is cool. Masternodes were cool as well, right? Basically making that kind of lazy analogy between an Ethereum ecosystem fueled new wave of excitement, which eventually, passive income and has all these dreams and promises, but peters off into nothing. Now, I'm not educated enough yet still to have a sophisticated longer term view on the ecosystem, and I think even if I were to have one, it would be distinct from my trading. But is that sort of what the bearish case for DeFi and for, I suppose, crypto, because this was so Ethereum led, would look like? That this is just a bunch of high yield sort of, however, whichever negative terms and reaching conclusions, failed revolutionary tech adjectives you want to use that don't really materialize into anything? Or like, if not that, what is the bearish case for this run up and the new kind of ecosystem that has been brought to the spotlight as a result?
I mean, I don't think that there is a bearish case here, because in the past, everybody said, oh, it'll make that really, what'll make like this a lot better over here, or this company, like slap a blockchain on it, right? It became a meme almost that, oh, like, by the way, overstock. Oh, by the way, we're doing blockchain now. Boom, stock goes, through the moon, because
Sure.
It's a buzzword. DeFi or finance, I should say, in general, is the first thing that's actually been made significantly better by a blockchain ever. And I think that it has massive staying power because of that. And I think that the people that realize that now and that, place their bets accordingly are going to do very well. It's the blood's in the water, like lending in DeFi are perfect meshes. Synthetic assets in DeFi, it's really just, if you read about them, it's incredible. The whole thing here, though, is like in the past, we've never had anything that wasn't just a cash grab, that wasn't just a gimmick. Everything was marketed as a revolution, but the irony is, none of it was a revolution. It was all straight cash grabs. But I think that DeFi has like huge staying power because, I can, let's say I need a loan, right? I go and, I've got to have a great credit score and, I've got to do this and I've got to get this dude's permission and hopefully the loan officer's in a good mood today, right? And hopefully the algorithm likes me and doesn't find out that, I did this, I missed my credit card payment 5 years ago, so now they're not going to let me get a house. Like, DeFi is incredible. Like, I can literally take my collateral, my tokenized assets, and I can provide them as collateral for a loan and get the loan immediately.
Yeah, but you're doing fully collateralized loans where we don't have like a partial. I can't. If I start a business and I say, okay, I need $1 million to start my business. Sorry, I only have $100,000 that you can take from me if I don't pay you back. That doesn't yet exist in crypto, and that hopefully will exist, but that kind of partially collateralized loan is not really there yet.
Yeah, I mean, we don't. All of these loans are essentially risk-free. The risk is platform risk, which is, oh fuck, there's something wrong with Compound, and now the money that I lent out is stuck on the platform, or the liquidation engine didn't work properly, and now, this guy's collateral value went down, and he reached, his margin limit, and shit, like it fucked up, and now I don't get paid back. Like that's the only risk. It's pure platform risk. But other than that, a fully collateralized loan is, for a lender, it's a dream. It's a zero risk loan.
Oh yeah, as a lender, people are like, legacy people are out of their damn minds right now. It's just their lack of confidence in the platform risk. But if you are legacy minded but crypto smart, you're just like living the dream right now. We are talking about bad yields in DeFi, putting in stable coins and getting like, what, Messi? What's like bad? Like
a horrific yield, like a 30% APY.
30% is like the worst. That's like you're depositing USDT and maybe you get 30% APY.
30% is straight AIDS. Like,
yeah, it's awful. And like 80% is common. Well, you go to friggin' legacy, and for your dollars in some countries, like where you guys live, you may be paying for the privilege of providing your money. And in US banks, you could be getting like 6 basis points. Okay. Well, this is insane. So yes, this is still a cash grab, but it's a difference of, we are establishing the rails, and the stupid stuff, the food tokens, is very different from the legitimate stuff, which is establishing, non-custodial lending mechanisms and the ability to execute contracts and collateral mechanisms that have on-chain governance for people who decide whether or not you qualify for a loan based on your input parameters, or all this stuff that makes a lot of things really exciting. And I think there's a ton of potential value in that. What we should see, though, is yields as the confidence in the protocol level components increase. The yields on stablecoins in particular should go way, 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 way down. So yield farming is like a gold rush, right? Like the people earliest, some are selling the picks and shovels, but some are the ones hunting for the gold, and they're taking a lot of risks, but they're getting massive rewards. Well, eventually it all just kind of levels out and gets much lower, but we'll still see premiums in yield relative to the legacy markets for a really, really, really long time because of the platform risks and, the barriers to entry and all that stuff. But we may start seeing like 5 to 10% yield on stablecoins instead of,
which is fantastic still when you
you're getting hundreds of times more return than your 6 basis points, but nothing compared to 100%.
I think you made like a really interesting point, when you were talking about because earlier, something, like you want to go start a business, you need $1 million, but I've only got $100,000 of collateral, something that trust me, it's coming. Like every bit of our financial infrastructure is going to be at least tried out on the blockchain. But you've got a situation where, okay, I do have a DAO, and the DAO says this guy has $100,000 of collateral, but he has references from this guy and this guy, and we know this guy and this guy's vouched for him, and so we're gonna grant his loan.
They're sort of tokenizing your social
credit,
if you will.
100%.
Banks do that right now. Like someone tells you, no, you're not worth the risk. Yeah. Your business idea freaking sucks. What if in this scenario you're a token?
So what people don't realize here is, in the real world, these yields exist too. The issue is that the bank takes the majority of that yield and gives you a little bit. Here you go. Thanks for empowering us. We really appreciate that. DeFi, like with these protocols, they're so much more efficient than banks. They have so much more or so much lower overhead than banks. So it really opens the doors to, and I know this is getting like a little, Bitcoin-y libertarian, but it opens the doors to having total freedom and control of your money, which you should. I believe in that. It's your money. You made it. Nobody should tell you where you can spend it, how you can spend it, how much you can spend. I don't believe in any of that. And I think DeFi enables everybody to not only, because Bitcoin enabled you for the first time ever to be, your own bank, in the sense that I can send my money trustlessly, pseudo-anonymously, almost instantly, to anybody in the world for a very low price. Now with DeFi, I can get a loan for a reasonable rate without having to do really anything. I just go click a button. It's all
quick question, the reasonable rate, because someone is paying that 30 APY right now, right?
I'm doing it right now.
Hold on, if I can direct us one just very quick step back. Ledger, what's your explain like I'm 5? When people hear yield farming, right, they may be, used to the idea of receiving interest on holding money in, say, just a normal bank account. But, the specific term of yield farming and those much higher percentages, could you give us a very broad kind of highbrow overview of what's implied by that term?
2 primary things people will associate with that. The simplest one to understand is I have Ethereum. I put it on this platform so that other people can borrow it, and I earn a yield because of that. Mm-hmm. And I'm earning interest in the form probably of the platform's stablecoin. So I'm doing this on Cream, and I'm earning Cream because I put Ethereum into Cream. Other people are then borrowing my Ethereum, and they're paying for the privilege. There's a net of what they pay and what I earn, all that. And the one that's more appropriate for what's going on in the space has to do with providing liquidity for trading all these tokens. And this is what I think actually has a lot of really interesting impacts, because I think it's causing different price action than order books, whole different thought. But instead of a classical pyramid structure order book where someone says they'll buy here or sell there, whatever, across that spectrum, V-shaped order book, mm-hmm. You have 2 wells, and everyone agrees to have dollars or let's say dollars and Ethereum on that pool in that well. Well, you're putting 50% of each in there. Now there's derivatives of these mechanisms, but the primary concept of a liquidity pool is that you're putting 50% dollars, 50% Ethereum, and then your buyers and sellers, they come by and they say, I want a little Ethereum, or they say, I want a little dollars. and they're dipping into that well and they're using it as their liquidity. The more that they splash into it, if they're trying to take half the well, it's going to have a price impact because the automated market makers that are keeping the balance of 50-50 between the wells are adjusting the prices, incentivizing arbitrage folks or traders or whoever else to come in and maintain the 50-50 balance and setting the price. So it's a different mechanism for setting the price for the asset. And the liquidity provision is a very inefficient market participant because they are essentially the dumbest one there, because they just put their money in and they get a little Ethereum or they get a little dollars, and they suffer impermanent loss because someone else is coming in and selling Ethereum as it goes down or whatever. So now you're getting Ethereum on the way down and you're losing it on the way up because of the structure of people participating. So you're never really the most efficient person. So impermanent loss is the fact that kind of balances out over time, but you're never efficient. And yield farming is when these protocols, now Uniswap themselves is enabling this, but before it was Uniswap was where the wells exist, the liquidity pools, but some protocol like Cream might say, well, we're providing yield to people that provide liquidity on Cream, because providing liquidity on a token enables the trading of it. That is good for the token. So they're saying we're putting 10% of our token distribution towards rewarding people who pool ETH Cream or Cream USD. And now they're dripping that onto people who put their liquidity there and suffer impermanent loss. Now, if the number goes up on the asset, at the same time you're earning it and providing liquidity, you're farming the yield, and then you can hedge against it. You can do all this other stuff, but that's the primary concept of what yield farming is. And there's a whole bunch of different ways to stack it, to compound it, to make it crazy, but the biggest mechanism is this liquidity provision and people rewarding liquidity providers, not only with the fees, you get a little bit of fee, but the token on top. Messi, did I do a good job?
Fantastic.
I think that's an absolutely fantastic job of explaining, and I'm not going to explain it again because you did such a good job, but I am going to add that impermanent loss, right? Everybody's heard the term. Few understand this, right? LOL. All impermanent loss is, and the best way to think of it is that no matter what direction the market moves, on a 5x move, on a 50-50 balance pool, you're going to underperform the market by 25% on the way up or the way down. And that's because you're getting rebalanced towards, like say I'm trading Cream Ethereum, but I'm not trading it. I'm a liquidity provider, and Cream goes 5x. Well, if I just held my Cream, I would have had better performance than being a liquidity provider. Right. So a lot of this yield farming and this token subsidization for providing liquidity, you say, well, what the fuck? Like, you're just giving these guys free coins. Like, is it for the health of the market? Absolutely. Like, that's totally, one part of it. People want a liquid book. When I buy something, I want to know that when it's time to sell, I can sell. But at the same time, that subsidization, if I was providing liquidity in Cream, and as a liquidity provider, they were going to pay me X Cream per week, theoretically is supposed to make up for some of that impermanent loss that I'm exposing myself to by being a liquidity provider.
A way that I like to think of it, if anybody knows what covered calls are, if you own 100 shares of Apple, you can sell a covered call. If Apple's at $300 and you're like, man, this is awesome, I'm going to sell a covered call at 320. And if it goes to 320, it'll execute, but I will have sold it for 320 and earned, the premium of the call that I sold. It kind of feels like a covered call, because you're essentially selling on the way up, or almost like a dollar cost average, or a naked put type of situation if it's on the other side, because the more MTA goes down while I'm pooling MTA, the more MTA I get and the less like dollars I get. Yeah. So you're inefficient, but if you want to DCA down, like pooling, it's not the worst way to do it.
It's honestly, it's the exact same way for exiting too. I'm okay. Like, and this is something I never got to speak on earlier, but I will just briefly. We were talking about, when an asset's in price discovery, how do you know when it's top? My answer to that is, I don't give a shit how high something's going to go ever, because the reality is you're not some fucking, you don't have a crystal ball. I don't care how you're the best fucking trader in the world, right? Which I'm sure none of the people in this room. You're literally the guy. You don't you don't always buy bottoms and sell tops. That's extremely unrealistic. And to think that, all right, I bought this at the bottom and I am going to sell that at the top is unrealistic. The best way to take profit, in my opinion, is to do so on multiples. And here's the thing, like, I can look at in price discovery, of course, there's no established levels, where there might be liquidity or, whatever. But if I'm just taking profits on multiples, and you have to think about it, let's say you get a 4x on a trade, like that's incredible. You can't do that anywhere else in the world except for in crypto. But bro, like you sold, this shit actually went 8x total. You sold way before the top. Well, you need to understand at the same time, I sold my 4x, but I was more than happy to take it because I was accepting that downside risk. I was accepting, my unrealized gains for basically another 2x, which is nothing. And as it goes up, the downside risk, increases, and the risk reward of holding that for a longer period of time becomes skewed towards an unfavorable setup.
Yeah, because you had told me that before I sold what I thought was a local top on Uni. I avoided a 10% drawdown, but then it went up by another 100%. And I thought I was a decent trader, man. What happened? I missed a lot of hundreds of dollars.
Yeah. So bringing this back to impermanent loss, let's say I'm exposed to MTA and I'm bullish on it. And maybe my bag is so fucking huge that I don't have liquidity in the market to have a proper exit. Theoretically, of course. So what I would actually do, and what the smart thing to do would be, I'd be a liquidity provider. I can get paid extra MTA by doing it. I'm already long MTA, so I don't really care if the price goes up, it goes down. I've got a number in my head. I've got a value in mind that, hey, this is going to be $100 million project someday. Okay. So as it goes up, though, it shifts me towards Ethereum and away from MTA. And that's what I think a lot of people are missing, because a lot of people think that if I enter with 100% of a trade at, $100, that I should sell 100% of that trade at $200. And I think that's the totally wrong way to do it. When I exit something, and of course there's sometimes nothing feels better than just nuking a market. It's incredible. But at the same time, the smart thing to do is, it's going up, you got your 2x, take some off. You got a 4x now, take some more off. You got something, now you have your 8x, take some more off. Have multiple exits, because velocity of capital is so important with all these shit coins. There's so many things that are flash in the pans, and the opportunity for entry at extreme low valuations it occurs in a very short period of time. So if you have 10 positions you're in, and maybe all those positions haven't hit your final target yet, right? But then you've got a new opportunity that comes up. What are you going to fucking do? You don't have any fresh powder. Maybe I should cannibalize this bag or this bag and, buy some of this, whatever. But if you had just been taking profit at multiples, if you had already taken profit on 3 of these bags at a 2x, you'd already hit a 3x on some of those. Now you just have fresh powder. You're ready to rock. You don't have to ruin any of your setups. You don't have to dump on a market on something that's bullish. Maybe your dump is the determining factor in whether this thing continues upwards or not. So I think that it's just incredibly smart to continue to take profit on these multiples. Understand that the biggest thing you can do to set yourself up for winning is have velocity to your capital. You want to constantly be executing and be ruthless about your execution so that you have fresh powder to enter new opportunities ASAP. Because I've literally seen things to where seconds make a difference in my entry. By being one of the first people, just because you had fresh powder on some of this shit, people are buying your 5x in 10 minutes, which it's just outrageous. But you've got to set yourself up for that success, and you need to continue to expand, the bags that you have on, and to continue to take profit when they're off. Because if you don't take profit, and I've said this 100 times, people have such difficulty selling these shit coins. I think that's the most needed skill if you're going to be successful as a shit coin trader. You can't form attachments to them, and even if you are attached, you've got to learn when it's time to let go.
On both sides, right? Going up and down, as we discussed earlier.
Yeah, of course, it's going up and down. But just in context of going up, though, like, why does anybody buy a shitcoin, though? Why wouldn't you just buy Bitcoin? Well, when you're buying a shitcoin, you're not only buying the shitcoin, you're subscribing to a dream that you have, you know, like, because you've heard stories of people that have changed their lives on this, and you start thinking, you know, like, this is going to be me. I just know it, you know, and it's a lot more difficult when you start forming those dreams to part ways with your position, because it's easy to dump a bag. I mean, abandoning like dreams, like things you've thought about every day, though, is much more difficult. Sure. So have that emotional, like,
I mean,
from what
Cred, I know you're this way. Like, you were a later market entrant to Bitcoin and crypto than me. Like, we're not like crypto rich because we got in 2013 or 2015. Sure. You know what I mean? Like, a Bitcoin was freaking expensive when I started buying Bitcoin.
Yeah, man.
When I first heard about Bitcoin, it was $7, but I didn't buy it then. So for me, trading altcoins or trading leverage or doing anything in regard to trading is a way to maximize my market exposure so that I can make more money. You know, like, in the path to faster multiples is to be a shrewd market participant and take advantage of highly volatile, nascent ecosystems like trading crypto. Or else we could just trade stocks. Now, maybe we should all just freaking traded stocks this year. But that's why I do it. The one alternative I would suggest relative to what Messi said is, I think what he said about taking multiples, that's really great for like a high conviction investment. And you think, I'm going to be in this for 3 months, 6 months, whatever it takes to hit my target. The other mentality that you can have and still play something is playing a setup and being willing to buy the same token higher. Like, Messi does not really re-enter coins. Like, when he's done with Cream while I'm buying it, he's done. Like, he's probably not going to re-enter Cream unless it has a
outside by the time you're buying the first drink.
Yeah. Right. And like, I'm willing to, like, I can be out of uni right now and it's higher than where I sold. If it presents a new setup, I'm totally fine buying uni again. And that doesn't hurt my feelings whatsoever to buy it from higher. And it allows me to get rid of this psychological issue of not being able to buy a token just because it's 10 or 20% higher than it used to be.
Yeah, I think we talk a lot about paying up for an entry. Like, I think the 6K breakdown that Duck and I discussed in the past is a good example, whereby there was a lot of incentive to kind of knife catch that. Like, oh, just a quick spike to 4.7, then we go back to 20, etc. Whereas my view was, when 6K broke down, well, I think the easier trade is, why don't you just buy back above 6K, right? Whenever that might happen, whatever time might, you know, occur between A and B, however low price might go and chop and spend there, the easier trade is the one you sometimes have to pay up for. And I feel really bad because I interrupted Duck. We had, I'm sure, a very prescient question about yield farming, which I wanted to get a definition for, and we did. But now people in the chat are asking about his well-being. So, Duck, please rid me of my guilt.
No, what I always wonder with like all these, like with this farming that's going on, like someone is paying for it, right? And you have these crazy gains that you get. And I mean, it's just going because you get new people that come in, right? And then at some point when no new people come in, it just starts unraveling. That's kind of my feel on it. But I mean, I'd love to hear your opinion on it.
Messi said it's a zero-sum game, and I think it's only zero-sum once new money stops entering. And I think that until that point, it's all just liquidity issues, you know. As markets expand, I have a thread on this I'll have to link in the chat, but you know, Gainsey said, who's losing in all this crap? Because he was like, I just made $500,000 in a month, you know. And my thing is, no one is losing because there's a lot more money coming into this ecosystem. So there's a period of time where literally everyone's making money, except for, you know, the people that are playing it really poorly. But a lot of people, they're just in a buy and hold situation for a while, and they're like, wow, I'm just making more and more money. I'm getting dropped all this crap. And it's because there's money being created the same way fiat money is just created out of thin air through the administration of debt. Like, if I'm given that loan, well, that was money. I was given $1 million. That $1 million never existed before. Only my collateral that they'll take from me if I fail to repay the loan existed before. Now there's a new $1 million. That's the same thing as the Unity token being created out of thin air. then we all assigned a value to it and more money came in to buy it. So this is money creation through altcoins. And then eventually when the contraction occurs, like you said, Duck, then it starts to contract, money starts leaving the ecosystem and the liquidity disappears. And now it's really hard to escape. So some people are constantly taking some out that whole way up, the whole way up where money is being created, because they don't want to be the holder of the zombie token when it's all said and done and the liquidity goes away and then they can't leave. And that's when you get the Bcash chart that, like, sure, there's still billions of dollars of Bcash market cap, but how is Roger going to sell his billions of dollars of Bcash? He can't, because that is now a zombie token. That money no longer exists because there's no true liquidity there. So it's all, to me, a mechanism of the liquidity in the ecosystem and the flows of fresh money. Whether in our case that money is Ethereum or stable coins or Bitcoin, but in legacy markets it could be fiat.
But I mean, we all agree on the point that we're all just pushing the issue in the future, right? So we have like these tokens that we're pretty much like, if you're making money on like a lot of these projects, it's just someone else in the future is paying for it. And I mean,
eventually someone will hold the bag eventually.
Yeah. And I mean, we all agree that most of this stuff, like, I mean, that's obviously always the case with like new technology, but like most of the stuff is heading to like an illiquid future, going to zero, whatever you want to call it. And that's kind of my issue that I have with like a lot of this stuff.
But don't you have the same issue with any free market? Like, the same thing happens. That's exactly how an economic expansion works. That's how Brazil grows and then goes through a depression, and how their currency falls apart because of the variety of impacts on the way that they manage the economy. It's the same exact thing. Contraction and expansion exists.
I think a more generous interpretation, perhaps, could be that one should have reasonable expectations for there at some point to be a divergence between token prices and then the real material breakthroughs or progress being made in advancing the ecosystem from a technological point of view. So this is kind of, I think, one of the mechanisms of a bubble, if you will, where the real or perceived technological or otherwise progress being made is indistinguishable from a relative or related token price or whatever price increase. Like, they go up linearly and you're like, that's amazing, all of this new stuff, it's all printing money, this is going to go on forever. And then at a certain point there's a correction, whereas the token prices or whatever you're valuing it by may crash by a fair bit. That doesn't mean that the ecosystem as a whole or the advancements as a whole are going to go to zero. I think .com is a pretty good example of that, right? Where everything went up, it's like amazing, this is the future. A lot of trash died, but later in another form, maybe in the form of new instruments, new companies, etc. That progress isn't lost, right? It's not zero sum. It just takes a different form, like a law of energy type of thing. I don't know, thermodynamics.
Yeah, Ray Dalio's Big Debt Crises is you got to read it. If you don't read that book, you just can't understand the way economies work. And they could be really big economies, like the way the housing market collapsed, or they could be small economies like the DeFi ecosystem. But it's going to help you understand expansion and contraction and be really helpful for how you think about any market. And I think what you said is spot on, Cred. So yeah, I mean, there's always going to be that situation where the contraction occurs and it's really friggin' painful. That's a market cycle is it requires it.
And Doug, you talked about losers. The real loser is me without a fucking Uniswap account to get all that, to get that free airdrop.
You're no uni right now.
There's no such thing as a Uniswap account, Cred. You just have a wallet address.
Wallet, you know what I mean. A Uniswap setup. Forgive my improper bloody noun.
You just need an Ethereum address. I
never connected it. I haven't got MetaMask. I think all of that's left in 2017. I just did not set up the infrastructure this time around. There we go. Yeah. The shameful admission. Gents, any final notes you'd like to either round up, end on, comment on something further? You've been incredibly generous with your time, so I'm just be grateful for any final thoughts.
Ledger, do you want to start, or do you want me to go first?
I've had a good time. if y'all like long live streams and podcasts, then I've got one of those. You can go to LedgerStatus.com and check it out. Me and Carpe Noctem, if y'all know Josh, we're more momentum traders, moving averages and stuff. We're part of that crew that Don Alt and Cred send you off to every now and then. But we like to talk about price action and markets in our podcast, and I'd love for you to check that out. And I've done some YouTube videos on some of this stuff, like the yield farming and some of that other stuff. And it's mostly just, it's me, one take. I'm just looking at a camera and talking about
just
something.
Like this.
Yeah, just like this. So if you want something specific, I have a handful of those.
I'll leave you guys links in the comment as well, so our audience can click on those.
I've seen them as well. I can vouch.
I can vouch happily as well.
Sure. Okay. So I'll go next then. I want to reiterate, people see, these large accounts on Twitter and they almost deify them. But I want you to understand that, whether it be me or Gainsey, who's, very publicly crushed it, in the last couple of months, or anyone else, like the guys that are out there killing it, it's not easy. Like, I do this for literally probably 12 hours a day, every day. Whether, that's market research or, networking, or I'm balls deep in this. And I feel like a lot of my success comes from my dedication and my commitment to this. If you want to be successful in crypto and you want to be a successful, whether you're, a price action trader or a momentum trader, you're a levels trader or an investor or whatever you do, you're going to have to put in a lot of time. This shit is not easy, guys. And I lost for a really long time. And I could still be way better than I am now. And I know that. So with what's coming, like 2017 set the global stage for cryptocurrencies. I feel like after 2017, while I think the study showed that maybe 1% of the world's entire population even participated in cryptocurrency, the entire world had at least heard of Bitcoin at the end of 2017. It became something that went from something literally no one knew about to something everyone at least knew about. And I feel like everyone at least knew that one guy that like maybe made some money, or maybe he lost his money or whatever. But you've got to understand that with that stage being set, when there's blood in the water, like there is now, you've got guys like MicroStrategy buying, hundreds of millions of dollars of Bitcoin, that they're going to be the first of many. You can trust me on this. Like, I think it's extremely high probability that some country somewhere is going to say, hey, we've got $1 billion sitting around, let's fucking throw $1 billion of Bitcoin in our reserve. Like, that's peanuts to them. And why not? Like, this is, it's insurance against the collapse of our economic systems that are in place today, like right now. So with all that being said, like when this starts going, guys, everybody's going to want a piece of this shit. People keep saying that, 2017, this will never be as big of a bubble as that was. Bullshit. People said the same thing in 2013 and 2014. They said the same thing in 2017. And they're going to say the same thing about 2020, 2021. We have more leverage in the system than there has ever been. And that's part of the reason why I think all of this shit's going to moon, because everybody is super degenerate here. Everybody is going to leverage up. And what I mean by leverage is people are going to, I've got Ethereum. I can take a loan for some fucking US dollars and I can buy more Ethereum with it. How great is that? Which is the same thing as, I'm on a margin exchange and I'm using my Ethereum as collateral. But that leverage doesn't just exist for Bitcoin and Ethereum now. It exists for everything. Everything imaginable now is leveraged through all of these lending protocols.
All of that's terrifying.
It's extremely terrifying. And that's why I think this bubble is going to be fucking crazy. With that being said, I should have sold more in 2017, just like anybody else. I didn't play it perfectly. And I lived with so much regret every day for 2.5 years, being like, bro, you had so much, it was so simple in retrospect, and now you're literally living with pain and disappointment in yourself because you let your own greed get the best of yourself. Trust me, guys, with what's coming, with how big this bubble is going to be, with the amount of leverage in the system, this next bear market is not going to be one you're going to want to stick around for. It might last for 5 years. The last one lasted a really long time and because a lot of damage was done, but this time even more damage is going to be done. So I would encourage everyone, if you're passionate about this, and maybe you're not, that's fine. This isn't cut out for everybody, but if you're passionate about it, ask guys like Cred questions. Like, these guys have a lot of free content. Go check out LedgerStatus podcasts. Come to the Trading Pit. The link's in my bio. I'm sure we'll post it below the video, but come in and hang out and ask questions and get a feel for the community and what everybody's doing. Everybody is super friendly. I feel like if you're looking in the right places, and make that commitment right now, though, to not only, I'm going to be serious about this. This isn't going to be easy, but if I work really hard, I could make more money than I ever have in my entire life over the next 2 years. But also know that the second you start feeling like a genius, it's over for you, because I've totally felt like a genius before. And I think anybody that says that they haven't had that feeling in the market is either an inexperienced participant or they're lying to themselves. Because the whole way up, you need to be taking profit. You need to be buying tangible assets. You need to be buying things that, are still going to be worth a shit in 3 years. Anyway, so rant over, but guys, like, seriously, like, take this very seriously. Like, you could really, really kill it or really lose a lot of money depending on your level of commitment and your level of dedication to educating yourself in the next few months.
I love your conviction on the continuation of the market, because this has already been probably the most profitable time, definitely the most profitable time I've ever had in crypto. So some conviction that we're just beginning is welcome on my end.
Well, sure. And things happen totally different this time. And I was unprepared for it, but I saw it early and I was able to flip-flop my views, because in the past, how it had always worked was, the on-ramps were Coinbase, Gemini, like all these big exchanges. And what was available on those big exchanges? Bitcoin, Litecoin, Ethereum, right? And the main difference here, okay, is that, now, like, of course, we've got way better on-ramps and stuff. But in the past, what happened is, Bitcoin went up. So people got attention. People wanted Bitcoin. They got greedy. They started buying altcoins. They made money in those large caps. They got greedier. The money trickled down into the medium caps. Those people got greedy. The money trickled down. And eventually the party's over, right? This time, we started from the bottom up. Just weird as fuck. I've never seen that before in my whole life. But that's because of the fact that DeFi had an immediate product market fit. We didn't have to tell investors like, hey, our big startup idea has a $1 trillion addressable market. We're going to go get them. Like, DeFi made products, and that market, billions of dollars, was already there. The traders, the holders, the exchanges, the gamblers, anybody who is a crypto participant is a DeFi customer. So are we super early? And that's what people ask. I think we are. If you look at previous bull markets, and you look at especially like Bitcoin and altcoins, there were pullbacks that made people go to full Wojak mode, like want to fucking tear their eyes out and scream. And, like that recent MTA pullback for me, I was looking at it just like, holy fucking shit, like, what the fuck is going on? Like, this is absurd. The market's got to be wrong, right? But at the same time, if you look at Bitcoin on its front of $20,000, we had 4 or 5 pullbacks where literally the bears came out. The shit went down 30-40%. The bears come out and they're like, party's over, guys. I was right. By the way, which is the most annoying thing in the world. I've been bearish since $1,000, and now see this 50% down at 4,000. I was right. Told you.
And there were retail people like me or Cred, or I don't know when Don got in, but that was when where I was like, oh my gosh, you just gave me this gift of $1,800 Bitcoin. Like, thank you. And like, knowing the narrative that there were people ready to get in from the sidelines was huge back then.
You came in with that skill though, because I feel like if something makes me sweat, like, I know that an unexperienced market participant must be just shitting their fucking pants. Like, because trust me, guys, I'm not like some super stoic, like fully in control of my emotions guy. Like, like everything you're feeling, I feel it too. The whole point of this game is to use your own emotions as another input or feed of information, rather than to let your emotions determine your actions.
Yeah, I'm not saying mine was from a state of brilliance buying.
That sounds pretty smart, man. I'm saying.
I was buying Ethereum at $180 after it was at $11. So, I mean.
Okay. You bought someone's 10x, mate. Absolute mug.
Yeah, and then I was like, oh my God, it just went to $400 in like 3 days. This is amazing. I got to learn more about this ecosystem, and then I'm hooked forever. But when you recognize the temperature of a market, The people that were in Ethereum from $11 and thought it was all ridiculous and it was going to die, they missed the life-changing money. Like they had the money that was cool, and they missed the life-changing money. I knew people who, let's say they had like 20 or 40 or 50 Bitcoin, when Bitcoins were $100 or less. And by the time 2017 came and it broke a new all-time high above $1,100, and they were like, they held one Bitcoin just because. And the run up of the whole market from 1K to 20K, not to mention all the alt runs, they had a Bitcoin the whole time. They were just like, I can't buy any of this. This just doesn't make any sense. So at some point, you have to recognize that the market is growing. And if the market grows again, I don't know that the market is growing yet, but I think we are on the potential precipice of the market properly like sizing up as a whole, which would enable that type of growth again. And I don't want to be the person like they were, where I'm like, y'all are freaking nuts, like this is all insane. Like,
because our subjective valuations mean nothing at that point, right? Like,
right.
Certainly if they're based from personal experience. Like for me, this is expensive. For me, this is cheap. I know some people who make it work. I mean, bloody one of them's on the call right now. I know Duck has that similar, almost intuitive, but also technical-based system. Not to put words in his mouth, but I agree. And even in his model, as far as I know, after a certain point, it's just that mold breaks, and you have to get used to the new game in town.
We could see a DeFi protocol that's worth $20 billion or $50 billion, and
I think we will.
And my brain will break because of that, so I have to eliminate my bias and figure out what's the justification for this and how do I play it? How do I trade it? Maybe I'll end up just a scalper. Like maybe I'll struggle to hold anything for a period of time, but I can always trade a chart. We've learned to do that in the market.
And here's the main thing though. Like this is like over the past maybe 2 weeks has been the first major, like, oh my God, this hurts like hell pullback of the alt season. Right. And now we've just had a literal stimulus package at what arguably is the bottom of some of these moves drop to degenerates. Who the fuck is on Uniswap? Straight up degens,
Yeah.
guys that are going to take this money and are, they're going to FOMO these coins. And that event happening couldn't have happened at a better time. But you need to keep in mind, like there's been Twitter polls. I've seen Inverse Bras done a ton. I've done a couple where, people ask, they're like, yo, be candid. Did you actually really make any money on Uniswap? Because it really sounded like everybody was making, a hilarious amount of money. But I think the reality is that the vast majority of people either ate shit or broke even.
Yeah.
I think the people that lost, and this was too many, they went after stuff that was completely ridiculous and obvious, and they got rug pulled or whatever enough times that they got screwed over.
And also so many dead devs, right? I mean, that's also
I hope that some of these devs die and we can finally go up. It's incredible.
I think there were, I don't know, in some ways I'm a complete degenerate. In others, like I don't even consider some of these things. People are like, oh yeah, this is sure. I can't even think of one, like hot dog coin, like 200,000% APY, go farm it. Like, no, I'm not risking money on that.
Yeah. People need to keep in mind that, like on all of this shit, I don't believe that a state where most people did not make any money is indicative of a macro cycle top whatsoever. And people need to understand and keep in mind that every, leg within the macro cycle is its own micro cycle it's a fractal of the macro cycle itself. The same emotions are felt, the same experience, is felt. Like by the time it's top, everybody will be screaming buy the fucking dip. And right now, altcoins turned and people are like, you guys are fucking idiots. So, alt season's over. Sucks for you. I hope you sold.
Can I caveat one thing?
Sure.
Which is, I think that right now it's money going back and forth between people that are like veteran to crypto largely. And I think at some point, and it's probably led by Bitcoin or maybe like the Ethereum DeFi thing catching on enough to pull in normies or whatever, we need like new market participants to bring money in. That could be a lot of these macro people, like the people investing corporate treasuries into Bitcoin. It could be
You'll know when that new money is coming in, though, when these majors, when these large caps, when these Bitcoin pairings, when things on Binance that, I mean, there's some amazing looking setups on Binance, but, you know, nobody's touching them because that's not what's moving right now. That's not where the liquidity or the interest is. You'll know that new money's coming in when that shit starts moving.
For the big continuation, though, I want to see some of that as proof, I guess, is what I would say.
Me too.
Yeah, the large fiat on-ramps, kind of level 1 accessibility showing some punch. I mean, I'm sympathetic to the argument that DeFi removes that sort of initial barrier where you first have to get a Bitcoin and do this, and, you know, to access the ecosystem. A lot of that is, you know, whittled down. But I still think for the majority of new participants, it's almost certainly going to, until, you know, or if DeFi takes more root, I still think the kind of base layer participation must or is likely to take the form of, you know, the fiat on-ramp, buying Bitcoin, Ethereum, etc., etc. So I kind of agree in terms of new money. Some higher cap evidence, I think, is required. Duck, do you have a similar view? Because I know you talk about, we talk about high caps a lot as well.
Yeah, I mean, in general, my feeling is that this has been mostly like without like a new retail money coming in, like this entire rally has been.
That's my view as well, for what it's worth.
And yeah, it's going to be interesting when or if that's going to pick up, because like there's little reason right now, I'd say, for new retail to come in, given that we have like Tesla going stupid high, having the traditional markets do some completely hilarious shit, where it's like, okay, you can either just gamble on like internet money, which this stuff is for most people, or you can gamble on Tesla, which is like something that they can actually wrap their mind around. But I mean, if this space does go crazy, and I mean, I'm not at the stage where I think it will be like going in the next like month or two. But if it does, that's going to pull people in, I guess. We'll see if it happens, or like what happens when it does. Yeah,
I think we'll see the highs of the year at the end of the year. I truly think the American election uncertainty is going to impact too much craziness until that's just over, until uncertainty is terrible for markets, and chop seems to be guaranteed for me until then. But I think the ability for people to speculate is really high right now. And I think the new millionaires of Tesla, they'll look to find what can I go to next too, because eventually, you know, Zoom with a 2,500% price to earnings is not going to be appealing anymore. And they hear about, you know, people that have 100x crypto or whatever, and they're going to want to dig into that. And maybe that's the calculus that could make it happen.
Well, let me briefly elaborate on, you know, because of course, like new retail money coming in, you know, what has to happen first is industry insiders, you know, the people that are already here, and early movers have to, you know, we've got to pump this shit to a point to where it makes a splash, and new people start saying, huh, you know, like I'm starting to read about this on the news, you know, I'm starting to get interested in this. You got to understand that the Uniswap market cap right now is $650 million on the circulating supply. That's what's out in existence. So we just had a, you know, $650 million injection into this DeFi ecosystem. Free money that people are going to sell, they're going to buy other stuff with. And I think, honestly, this is just the perfect storm to set the stage to get it to the point where retail would begin to become interested again.
Yeah, if this was 2018, like early 2018, the Uniswap token launch would be on CNBC's like Market Bell Close, whatever their shows are called. And they forgot about us because they got plenty of other crap to talk about. So I do agree with that. And I also agree, Messi, I thought that we were at risk of like more complete market cycle contraction. I think the Uniswap launch actually injected enough internet money
it's
like
into the protection for us, right? Our native plunge protection.
100%.
I think it gave us plenty of room for a brand new leg.
I totally agree with that, because I was beginning to even wonder, you know, are we gonna see more contraction? Like, is this shit gonna keep going down? And like Uniswap literally saved fucking crypto, and I 100% believe that.
At least from another like 50% of pain, you know.
100%.
Fantastic. Well, look, I think it's been easily one of the best sessions of Casual Friday, and I can only say thank you for being so generous with your time to both Ledger and Messi and the Duck. Of course, we do sit here as well. giving our less
I
informed
didn't,
comments.
I didn't get enough duck quacking.
Oh,
for
I know. He likes to listen, absorb, and plot from the shadows when stuff like this happens. He warned me as such, so I'm sure he'll come round. But also, we'll leave and to our audience, of course, thank you for being here and for your fantastic questions. If you want to see, read, and hear more of our guests, their links, I'll just leave the prescient stuff as the pinned comment. Easier than the description, I think. You can go watch, learn, and absorb. That'd be great. We've heard their final remarks and comments. I'll be keen to see how this ages in 1, 2, 5 years. Maybe we'll all be watching it from a jail cell, or I won't be because I still don't have a Uniswap. I'm not even going to say the word account because I'll get bullied. So, final thank you goes to Bybit, of course, for sponsoring Technical Roundup, YouTube channel, newsletter. As I always joke, I think Don and I are getting tattoos at this rate, but their support's been incredible. It means we can make content like this without trying to ram a ref link down your throat. So there's that mental image I'm sure you all wanted. Thank you for being with us over the last hour 45 minutes. Huge thank you to our guests again, and we'll see you on Monday. Take care, everyone.
Yeah. Thanks for being here, guys.
Thank you.
Later.
Bye-bye.